Good morning, everybody, and welcome to the 11th episode of the Oreninc podcast series with Mickey Fulp and myself, Kai Hoffmann. I'm the CEO of Oreninc. And Mickey, thank you for joining us again on this beautiful morning here in Vancouver.
It is a very beautiful morning. What a glorious summer we've had in Vancouver.
Paul Harris, who usually joins us here at Oreninc during our podcast, he's traveling this week. He's in Nevada looking at a bunch of projects for us and for the Mining Journal. So, shout out to Paul there in the field. I hope you're not sweating to death out there. As always, we've prepared just a little agenda. We're going to talk about a bunch of things here today in the next 10 minutes. I'm going to start again, as always, with the just a small market roundup. We're going to look at the Oreninc Index and how things have progressed over the recent days. And since our last interview, I think we've done that at the end of July. I think July 27th was the last date or the last recording date of our interview. Mickey's going to take us, or Mickey and I were going to discuss the base metal prices, especially again, like last time, the copper price developments. There have been some interesting developments just this morning as well in terms of the copper price, and we're going to end the podcast today again with our number of the week. And Mickey's promised me a doozy here, a really interesting one. And he hasn't mentioned it to me yet, so I'm excited about that.
Interesting. It's different. Let's just say it's different.
So Mickey, I'm going to start real quick and run us through the market here real quick. As you know, we're watching the junior space quite closely, and we've briefly discussed that, but it seems like we're still in the summer doldrums here. Financings are just, as of last week, we're just sitting at 22 financings announced. Although it's increased just a little bit, we're still hovering around the 20 number. Hovering between 18 and 22, 23 as of late. Just last week as well, like total dollars grew to around 45 million, which isn't great as well. But the average size, again, is back up to 2.1 million, back up from a million we've seen over the summer as well. One thing, I'm waiting for the final numbers from my data analyst here out of Portland, but it seems like we're seeing a lot more closings this week. At least I've noticed that looking at the press releases, so I'm going to be excited about seeing the final numbers for this week as well. One thing we're looking forward to, or I'm personally looking forward here as well, and we'll see what the impact is here on the markets, is Ontario is going back to school next week. That'll be interesting to see if we can see some volumes coming back. Mickey's got to mention about the TSX Venture here in a second. There was a breakout in volume last week as well, which is sort of unexplained. He's going to touch on that. That's it from the Oreninc Index side. Looking at the seasonality here, I think we got another one or two slower weeks, depending on the impact of Ontario coming back to school here. The U.S. is also slowly going back to school. Some schools actually started already last week, some classes. So we'll see a slow pickup in the market over the next few days here, which is obviously easy to predict. And, I can't wait for numbers to return to normal. Obviously, Labor Day here in Canada being a big date to watch here. So Mickey, again, as always, thanks for joining us here, and we're going to talk about the base metal prices, copper and or zinc and copper especially. So.
Yeah, well, I'm going to expand that and talk about industrial metals and how the major miners have made a comeback. That would include BHP, RTZ, Anglo, Glencore, and those companies were all in the toilet a couple of years ago. But this has been driven, as you've mentioned, by the copper price and the zinc price. And so we've witnessed something quite amazing to me today. I first looked at the COMEX market at what would be 10:15, 7:15 our time, 10:15. And copper was at $3 spot. It's now at $3.04 an hour and a half later. And in a 24-hour period, it's gone from $2.96 to $3.04. These numbers are 2.5-year highs. Zinc is at $1.41 as we speak. That's a 10-year high since commodities went on that run before the global economic crisis. At that point, zinc hit $2.08. Lead is at $1.05. That's the high since 2013, early 2013. Iron ore, $80, up 50% in 2 months. And coking coal, which temporarily hit an all-time high of $3.30 in March when there were big rains and in Queensland and cut off coking coal shipments from Australia. It's at $1.95. So to roll that into an idea, all these major industrial metal miners, the shares are way up, basically because profits are way up. They are cutting debt, which is the most important thing, and they're raising their dividends. So that's 180 degrees from 2 years ago. What a quick recovery.
I do remember the discussions about Glencore going belly up at one time.
Yeah,
that
so
wasn't too long
since
ago.
January of 2016, when metals prices bottomed, and if you remember, copper was $1.96, and I said this is bottom. Well, it certainly was. The Mining and Metals Index is up 100% since then. I think what we hope is that the base metal, industrial metal miners, that they be cautious. And so far they have been, with few projects in the pipeline, but hopefully they don't go on this drunken sailor binge that they did from, say, 2010 to 2013, which really hurt the market. And finally, I would like to say that I think the real metal with the greatest upside in this run is going to be copper, for a number of reasons, electrical reasons, and those not only electricity and supplying the grid for additional 25% of the world's population that can't go turn on a light switch, but also all this green stuff, which is all electricity based and certainly is going to increase the demand for copper.
So do you think green energy is the base driver behind most of the...
Absolutely not. No,
Absolutely
it is not.
So
It's
what's the
basically
driver?
industrial demand.
Yeah.
Okay, so cars, lots of copper used in cars, not only for electricity, but electrical means, but also components in automaking, and certainly the green energy component is an add-on. But let's remember that copper demand increases between 3 and 4% a year, and it has since 1900. And that is really driven by electrical demand, electricity, grid demand, wiring demand, and that's going to continue.
No, that's going to be interesting to watch. And I've just pulled up the chart of Glencore, and I remember the discussions in Europe.
I thought they
were going belly up with their
going belly up.
It was really...
And Tech too. Remember,
No.
I didn't mention Tech, but remember Tech got down to about $3 to $4 again. Not that long ago, a year and a half ago, Tech had bottomed, and the real concern with Tech, can Tech go belly up because of its reliance on coal now?
Yeah.
Tech is mainly a coal company now. But some people in the know said there's no way the Canadian government's going to let Tech go bankrupt. But we're looking at a chart right now, and
it's the 1 year chart right there. And
yeah.
See the 5 year chart. It's going to be...
So what was the low there on Tech?
We're down to $6.
$6, and it's
$5.69 was the low.
Yeah, and it's seen a high this year of what?
I don't know, 36.
36. So remember that, folks. I remember back in the global economic crisis, Tech hit below $4, and man,
that was a story I remember.
You can make money on these major miners. And another good example we haven't mentioned it would be Freeport.
Yeah.
Freeport's had some difficulties in Indonesia, geopolitical risk, but that's the best pure copper play in my opinion.
Just one thing I want to circle back on, since we've touched now on the base metal prices, and one thing I mentioned is that the summer doldrums are hopefully coming to an end within the next 2 weeks. We talk about, we also in context with the base metal miners here, or the major base metal miners, or industrial metal miners, we talked about brevity. So one thing I want to quickly touch on is like what should investors watch out for if the markets are coming back, if volume is coming back into the markets, what should the investors look out for, and what should they be aware of when, let's say, markets pick up and excitement is coming back into the space?
I think now is a good buying time because it's pretty evident that, we had a false start last year in mid-summer with all metals responding and got a little frothy. Then we've had this pullback. So I think right now would be a good time to buy these companies before the general market
wakes up to it.
Yeah. Perhaps.
Noticed,
even though the index now, the major metal miner index is up 100%, but a lot of if you let's look at the prices for iron ore. They're half of what they were during the boom. Copper for a very long time was over $4. So we still have upside on those metals.
And just one thing real quick I've noticed as well over the recent years is that whenever we think stuff is going to happen in terms of, let's say, Labor Day is the major date where everybody expects volume to come back into the markets, it's happened 2 to 3 weeks earlier. I was surprised last year around Christmas. I expected the new year to set off maybe a smaller rally, but it happened right the day after Christmas. So positioning yourself a little earlier these days might make more sense.
I would probably say it started on December 20th of last year. That's when the venture index hit its bottom, and it was up and away through the first week of January. That seasonality can be traded. So you wanna get in before the hordes do. So.
I think now's a good time to look at it. So
and we have seen venture exchange volumes pick up over the last couple of weeks. We had a 109 million share day a week ago Tuesday, so about 10 days ago. That was one of only 8 100 million share days on the venture exchange this year. Now, I will caution you, there's a lot of off-market trading or alternative market trading. So you take that 100 million share day and you multiply it by 2 or 2.5, you get the entire volume on the venture exchange. But, last time we talked, we were averaging 43 million shares one week, 46 million another week. Now, over the last week, it
actually looks like it's picking up. Just looking at the closes.
But the index has not picked up. The indexes continue to fall. It's 764 as we speak right now. Yeah. So it's been range bound in this 755 to 775 range now for quite some time.
Summer doldrums.
Yeah,
it really looks like it.
Absolutely summer doldrums. And people are perhaps a little surprised because last year we didn't have a summer doldrums, and that is so unusual. This looks like a very typical summer, except for the fact that it started at selling May and going away. We didn't really have that June pop that we generally see.
No. That we missed that.
It morphed right into the summer.
But to put a bow around it, seasonality is going to kick in strongly, I believe, this year, and to the positive, to the upside here, and that's my personal opinion. So send me an email if you disagree, obviously. So to put a bow, also is like to end our podcast here again today. We always pick a number of the week, and Mickey.
Well, we've talked about it. I thought it was going to be a bigger surprise, but I'm going to pick an ordinal number versus a cardinal number, and that's the 5th. So ordinal number would be 5.
Yeah.
Or I'm sorry, a cardinal number would be 5. An ordinal number would be the 5th. And that's the 5th of September, which is Labor Day.
Labor Day. Okay, so we touched on that before. I thought it was the 7th. Okay. My number of the week is 36, because watch out for something to happen in week 36 here at Oreninc.com. It's going to be interesting. We've been busy over the summer, and watch out for that. And always,
so the 36th week would be
it's not next week.
September,
around Labor Day again.
Oh, okay.
Right. Yeah. So we've been working towards that date, and it's going to be something interesting. And as always, thank you for listening. Send us your emails with questions. I haven't offered that in the past, but obviously that's a standing offer. And tune in next time. Thank you very much, Mickey.
Thank you, Kai.